What's up everybody, welcome back to my channel, Earn It, Save It, Invest It. And in this video, I'm doing my week 12 of my road to 100,000 or my 100K challenge. Now, the stock market's been a little bit volatile. I'm gonna go over what I have done, what I'm doing to prepare for this next few months. Seasonality, historically, this is a bad season for stocks. So I'm gonna go over what I did, what I plan to do, what my portfolio is looking like in terms of the goals that I have for my 100K challenge. Then I'm going to go over two stocks. I'm going to go over, actually before I go over those two stocks, I'm going to go over the stock market a little bit in general, what I think is going to happen over this week period, this week season. Historically, August, September, October are typically bad months for the stock market. So I'm going to quickly go over that. Then I'm going to go over two stocks that I think one is going to absolutely crash and the other one is absolutely going to boom. So just going to go over those really quickly. So if you do like this content, please give a like and subscribe. I'm going to try to make this video a little quicker. Probably won't be, but I'm going to try to make it quicker, and I appreciate everyone who watches. So again, give a like and subscribe, and let's get into it. All right, so as you can see, my road to 100,000, I am at $8,628.82. On Friday, I went up 2%, yay. But in the total, I actually went down this week. As you can see, HIMS is still heavyweight, 25%. Over the last week, HIMS went down -3%. So obviously, when I've preached this so much, is that when HIMS goes down or up significantly, it will put a lot of pressure on my portfolio. At least when it's going down, right? Puts pressure. When it goes up, it's giving me a lot less pressure. But at the same time, I understand that HIMS is so heavily weighted, it controls my portfolio more than these other ones. So when HIMS goes down, right? And then I have my other stocks going down, it really hurts me. I got very lucky, right? TQQQ went down, but Celsius went up 7%, and it is my third heaviest weight. Now, obviously, I think before that, it was my fourth heaviest weighted, right under Nike, but it's about the same. I think, let me see how much. I purchased, I believe, about the same amount of shares in terms of value, right? I think I started them at both almost about 800 to 1,000, the starting position size. So Celsius kind of saved me for the week. The Nike also went up a little bit, and then Meta, Fubo, Amazon all down for the week. Cash actually went up because I did not buy, and I will explain why. Over the last week, from August 18th to this weekend, August 23rd, I've gone down $71, and that's not including my $50 deposit that I make every single week. So I started at $8,650. I put in my $50 on Monday, but then I lost $71, so now I'm at $86.28. Again, that's not anything too crazy. It's just 1 week, and it wasn't a great week, so whatever. As you can see, I was down less than 1% for the week, but I was the worst performer out of all the indexes, right? I was down 0.82%. The Russell 2000, the small caps, again, Celsius, right? Celsius is part of that. Even though HIMS is very volatile and it's going through crazy stages right now. So it doesn't really represent a small cap, a normal small cap. But something like a Fubo even is a small cap, and it went down, but Celsius went up. And, you know, as you can see, Russell 2000 went up 3%, by far bigger. It doubled every other index. S&P 500 barely went up. The NASDAQ down 0.55. So that's why I'm saying if the NASDAQ is up, I have a higher chance of being up. If the NASDAQ is down, I have a higher chance of being down. And whichever way it is, I'm probably going to be more or less, right? I will probably gain more, or I will have bigger losses as well compared to the NASDAQ. And then the Dow Jones was second place in terms of the indexes at 1.5%. So obviously I lost against all the indexes, and I didn't have a great week. HIMS is not helping me. From the start of this challenge, June 2nd is when I started this challenge. I am up $674 from the investments, not from my deposits. So I started with $7,354.20. I've put in $600, right? It's been 12 weeks, and I do $50 every week. So I've put in $600, and my investments have gone up $674 over that time period. Since June 2nd, I am up 8.9%. I am in fourth place. I am in fourth place out of all of the indexes. The Dow Jones is barely behind me. but I am trailing. It's crazy. The Russell 2000 is the winner out of all of them, right? We have small caps really starting to boom right now, which is good. But I think once we start seeing a top for everybody, if we start seeing the Russell 2000 hitting all-time highs, the Nasdaq's hitting all-time highs, S&P, if everyone starts hitting all-time highs, that's a time to I'm going to actually be fearful. The fact that the Russell 2000 is starting to run is giving me a little bit of suspicion of, okay, well, are we getting closer to that correction? You know, when all the indexes are booming, you know, when you have more greed, eventually something's going to break it. Again, it doesn't mean to stop investing. It's just be aware of it. So the Russell 2000 is beating everybody at 14%. Then we have the Nasdaq at 12. Then the S&P at 9.7. Me, I'm just under 9. And then the Dow Jones is at 8.3%. So I'm not doing as well as I'd like to. But again, HIMSS has been very volatile. I walked into this challenge knowing that my position on HIMSS was going to do this. That HIMSS is very volatile, but I also started this challenge when it was at such a high percentage. Like, I think it was higher than what it was today. I was already at like almost a 200% gain on that stock when I started this challenge. So I knew that there was such a high risk of HIMSS going down over the short term, 6 months to maybe a year in terms of the volatility, but I also feel confident that eventually it will go back up. So I do understand that my results aren't going to look great right now because of HIMSS mostly, but other than that, I think I'm going to be performing well. Over the last 12 weeks, I have essentially kept up with my goal. I've been beating the goal. There was, I think, a couple weeks where I actually dipped under. Again, that's when certain stocks like HIMSS, it kind of goes through a correction or a little crash, a news cycle of something bad happening, and then it drops, right? But as you can see, I had 8,800 on week 9, and now I'm at 8,600 on week 12. So in the last 3 weeks, I have actually lost $200, $225, right? So, and that is including my deposits, right? Over those 3 weeks, I've also put in $150. So I am actually technically down, that's like $375 in total, right? Because I'm putting in money and yet I'm not seeing the benefit of it, right? It's just going away in a sense. So, you know, obviously I'm not having a great time right now in the last few weeks, but I still think as long as I stay on track and I still continue to invest into good companies, I understand that, you know, I started this challenge too, not at a time where things were very low. You know, I started this coming right after a huge correction and a V recovery. I mean, it was a V recovery. We crashed from the tariff and all of that announcements, and then we just absolutely recovered. And I mean, June was kind of in the midst, on the tail end of that recovery. So I understand that I am starting my challenge, starting this whole thing at a time where it's like all-time highs in the market, right? And I already have 200% gains on the stock, and now I'm starting this challenge. I know that that's going to hinder some of my results in a way, but at the same time, there's no reason to just say, oh, well, then I'll wait for another day. No, just going to start now. And I'm not going to invest into HIMSS. I'm not going to add more to my position unless I think it's valuable or really worth it. So I'm just going to continue investing in other companies that over time are going to give me that compounded annual growth rate. And it's just going to take time. If you ever are looking at your results and looking at week 12 and are starting to, you know, be hesitant or question, second guess yourself and do all of that, then you're not in it first. I mean, this challenge I'm at week 12. Essentially, I want this challenge to go 10 years. I want to do as much as I can for the next 10 years. I am 36, and when I'm 46, I still want to be doing this, and I still want to show people what I am doing. Now, it's possible year 5, personal stuff happens and I drop out. You know, I'm not going to drop out of investing, but maybe I drop out of YouTube or do whatever. But the fact is, if you're looking at week 12 and you're like, oh man, you know, I'm starting to my results are kind of lagging and stuff. It's a long game, and you just keep investing every week. depositing every week or every month, and then just making moves that you think are going to be worth the long term, right? So that's the game. Week 12, I'm not exactly where I'd like to be, but I'm still above my goal, and I have high hopes for the next. So like I said, I did not make any purchases this week. I considered buying Fubo because Fubo had gone down, but I just didn't. I had a little bit, again, busy week, and I was looking at the market, and I was like, you know what? I think I'm just going to wait. I'm going to wait 1 week. I'm going to hold on to my $50, and I'm not going to put it in right now. Fubo, though, has crashed a little bit. It's corrected down to a point where I'm like, I really like this price. It's still in the threes. But it was almost at the floor. It was at like 370, 380, and now it's in the 330s, 340s. So I'm like, okay, give me a little bit of a discount. I'm okay with that. I am most likely going to be buying Fubo this upcoming week, regardless of how exactly the market is looking. If it's going down, it's going up, it doesn't really matter. So yeah, I did not make any purchases this week. Stock market is in a greed territory. This is the fear and greed index, and as you can see, we're still in greed. Now, last week we were in greed, last month we were in greed. Last month we were higher greed. As you can see, we're at 73, and now we're at a 61. 1 week ago we're at 63. So we're now becoming less greedy, which is good, right? In terms of like, okay, the more greedy we get, the harder of a crash and correction you're going to get. So if we can move that needle a little bit down, I'm okay with that. What I think is going to happen is we're going to bounce between neutral and greed a little bit over the next couple months. Possibly dip into the fear. We might dip into fear a little bit. There's going to be a week or two that scares everybody. There's going to be at least 1 or 2 weeks in the next couple months that's going to scare everybody. So I do think we're going to be bouncing between the top end of fear into the lower end of greed, like where we are right now, and all of neutral over the next few months. Now, see, this is the AAII sentiment, right? The American investors, right? What are they feeling? And as you can see, the bulls, they've gone up 1%. Neutral has actually gone up 0.4%. And the bears have gone down 2%. So it's weird how we're getting less greedy, but more bullish, right? It's a weird mix. This is why I think volatility, why a lot of up and down game is going to happen. People are feeling a little bit more fearful, right? We're moving that needle towards fearful, but yet people are feeling more bullish. It's kind of weird. That's the stock market. If you look at how the AAII sentiment numbers have been since, like, we had this big crash, right, in April and May and all that stuff, and you can see the bearish levels at that time were in the 50. We hit 61%. We're in the 50s for over a month, almost 2 months. And the bulls were absolutely in the 20s that whole time as well. Then we started to make a recovery, right? Now the bulls are going into the 30s, right? Now we hit in the 40s, right? And then the bears went all from the 50s down to the 40s quickly and into the 30s, right? Well, if you look at the last few weeks, the bulls have gone down from 40% all the way down to 30%. The bears have gone from 33% to 44% over the last month. So, people are feeling more bearish right now. People are feeling a little bit more hesitant, I think. There's just a lot going on. This is not the best time in the market. We have Jerome Powell and Trump going at it. We have the tariffs. Questions about the economy, even though the economy is holding on strong, people are still like, well, how are the people feeling? Because I'll tell you this much, it's hard to afford stuff out there. It is. For a normal person, it's hard to afford stuff out there. So, where exactly are we? I think there's a lot of questions that need to be answered, and I don't think there's going to be any answers. I don't think we're going to have any answers over the next 2 to 3 months. So more over the next 2 months, because we're already kind of at the end of August. So I think September and October are still going to be kind of rough. But I don't think we're going to have many answers to these questions. So I think we're going to stay fairly on the neutral side, but it's going to be an up and down game, I think, over the next couple months. If you look at the Qs, right, seasonality, August, 60%, right? So technically, you are more likely to have gains in the market in August than you are to have a loss, right? It's 6 to 4, right? The odds are in your favor. But you look at September and October, those odds dwindle a lot in September. And I do believe what happens in August does affect what happens in September. I think if we have a really big August, that puts pressure on September to go down. That's just my opinion. It's going to be interesting because August had a spike and then a drop already in this month. So it's going to be interesting. I think these next 2 months, and like I said, September, that's next month. September's next month. So if we at all see any gains or very slight losses in August, I expect September to be a rough month. That's just, again, based on the numbers and my own personal opinion. So to quickly go over why I think the seasonality matters, I'm just going to quickly go over QQQ, right? QQQ is essentially the NASDAQ. It tracks the NASDAQ, right? And I'm going to go over, see these purple squares. These are all these 3 months, August, September, October, for the last 7 years. This last one, right, we had in 2024, that was the carry trade. I don't know if you remember, there was a big scare in July, and it shot the market down. It absolutely shot it down. And then people were like, okay, wait, hold on. It's not nearly as bad as we think. And then it came back up. So as you can see, in August, it was in position to have a good August because we had just dropped so much and significantly in July over, something that didn't really affect us. Then it boosted up in August and then it pushed back down in September. And then we pushed back up all the way through October. That's a good season to have. Obviously, you could see the pressure that got put on at the end of August, beginning of September. But you also have to remember, we're coming off this huge correction. Not huge, but I mean, it was a 15% correction. Yeah, that helps the seasonality. It's going to help you get the gains because the market wanted to go up. But let's look at this. This is what really caught my eye. This is in after our big crash of 2022, 2023, 2024, right? We're just riding the wave. We were loving it. But if you look at 2023 all the way into the mid 2024 until that big correction, what was the one spot that was weak? End of July, August, into October, right? This is when we had an actual little correction in the market that was 10% or more, right? It lasted from July all the way into the end of October, and it went down 10%. And this is at a time where we were recovering. We were coming out of a real significant crash, right? We went down 36% in the Qs. So, granted, there's always, just because you're coming out from a crash and stuff doesn't mean you're not going to have volatility. It doesn't mean you're not going to have a period where there's going to be some losses. But that was the time, those months, right? Now we're coming out of a boom, right? We had this big V-shaped recovery. We're coming out of this, out of this correction, and we're booming. Well, the time for stocks to take a break might be then. Let's look at our crash. The crash, everything was happening, right? Everything was going down. But again, as you can see, August and September, October are no different. Completely crashed. Now let's look at the year before, 2021. August, we start around here, and we end up here. We actually end 7% higher. Not bad. But we jumped up that 7% by the beginning of September already. August jumped up, and then September fell, and then October went up. Now you also have to think about this, though. This is leading. This is the very final boom before we go into the big crash. So, wasn't exactly, that October was a little bit, okay, that led right into the crash. Let's go into 2020. Big year for stocks. Everyone was getting into stocks, right? Started right here, August, and we ended October. We're basically flat. Basically flatlined. Flatlined. Went up, and we dropped, and we went up, and then we dropped again. The volatility in these 3 months is way more insane than any other 3 months. We'll go back to 2019. As you look, we start right here, August, and we end up fairly the same from where we start and where we end. Now, obviously, from the drop that we had, it ended up going up. But as you can see, it goes up, and then it drops again in September. Like, it seems like we always have this big boost, and then we have to drop again. Like, the 3 months cannot just go up. Over here, 18. If you know anything about 2018, we had a couple corrections, and it was a pretty volatile year. But as you can see over here, we started right here, and then we ended down. We ended actually negative into the end of October. And we were actually going up. We were moving up in August. We had a big boost, and then as you can see, we kind of drop, and then we kind of slightly move up again into October. So August, September were actually good, and October killed us. The point of everything is watch out. This is a bad season, and you just have to be aware of that. I'm going to quickly go over the 2 stocks that I think are going to do very well. Actually, the 2 stocks I think one is going to do bad, one's going to do well. The first one is Palantir. I think it's going to crash. I think it's going to come to a correction. I've already preached that a couple times, and I still fully believe it. If you look at the PE, it's at 244. 244. That is just too much. It's currently 24th in most valuable companies in the world. Right behind Home Depot and Costco and Netflix, right? That's insane. So I said, you know what? Let me do a quick comparison, right? I'm going to compare Palantir to AMD, which AMD is also in the AI. You know, it's not a software company. They actually have products, but it's kind of in the same category, right? And then we have Home Depot, Costco, and Netflix, which are right above it, right? And you look at the market cap, Palantir is above AMD, but it's lower than those other ones. Look at the PE. The PE is 244 compared to all these other ones. AMD is 42, Home Depot 27, Costco 52, Netflix 45. Everyone will immediately say, well, the growth rates. I understand that. But that is still a very high PE. You just have to understand that. The revenue growth, again, their growth is really good, right? Their EBITDA growth, everything is higher than the other ones. Their growth is outstanding. But that doesn't mean, what happens if their growth stops? Like, you have to understand that they are going, these are comparing, they're year over year. So next year, now they're going to be facing comps that are really good. They have to keep growing at this rate. I don't know if that's going to happen. You know, and you look at their profits, right? Their net income margin. Way better than everybody else, right? Their numbers right now are better. Their gross profit, better. Everything seems to be better, right? But once that slows down, what happens? The one part that I really don't like is the ownership, right? You have the insider percent at 7.5%. It takes 2%, and I mean 2.5% of those people selling will put so much pressure on the stock, and that would still be at such a higher insider ownership, right? I mean, you're talking at 5% ownership. That's 10 times more than AMD, 100 times more than Home Depot, right? It's just so much more that they have. Those people, if they're like, you know what, hey, we think this is where the stock market, or this is where the market cap is, or our stock's not going to go up that much more, we got to sell. It could put a lot of selling pressure on it. The income statement, obviously the revenue, when you look at it, they make a lot less, so much less. You have their net income though, right? And in terms of the ratio, right? Their revenue to net income ratio, it's way better, right? They're making 763 net income off at 3.4 billion revenue. That's amazing. So I get it. I'm not fighting Palantir's growth rates and fighting how much income they make, because they are a software company. They don't have to make products like Home Depot and Costco, right? Netflix is more of that, but Netflix has to produce a lot of shows. So I understand, right? Let's look at the balance sheet, right? The total cash. It's, in third place, right? It's in third, it has more cash than AMD and Home Depot. And you look at their long-term debt and to the total capital, they're completely in better position. I get this. I understand this. I understand all that. And I understand the cash flow is better, right? It's not better in terms of how big it is, but how much they're making in the cash flow compared to the revenue and stuff, I get it, right? Their capital expenditures, less than everybody else too, right? So I understand how Palantir's numbers look in terms of growth rates and all that stuff, but I just do feel that eventually it's going to catch up to them because these growth rates can't continue. You're going to be comped against last year. So if you had really good numbers last year, you have to go against those numbers this year. So it's just going to be, I think, hard for them to keep going, and people are going to start looking at Palantir. They saw this as such a growth opportunity, right? You can put money into it. And do you really think you're going to 10x your money now? Do you really think that stock is going to be worth 1,500 soon? Probably not. There's going to be, I think, a lot more sellers and more selling pressure than there is buyers of it. I think a lot of that, all those gains, all that high potential has already been baked into the price. The one stock I do think is going to go up is Fubo. Its PE is at 13, right? It just turned profitable. And the big thing is Fubo signals Q4 2025 or Q1 2026 close for Hulu Live TV merger while launching new sports initiatives. I do believe Fubo is going to do an amazing job with this, and I think the deal with Disney is going to just immediately boost so much of their numbers, and no one is really taking that into account right now. His person put the final takeaway: Fubo has achieved a milestone by delivering its first quarter of positive adjusted EBITDA, driven by disciplined execution and focused product innovation. The company remains on track with its pending merger to close by 2025-2026. Despite ongoing industry challenges, Fubo is advancing new sports-centric offerings and expanding its content partnerships while maintaining financial flexibility and operational momentum. It's true. Fubo is doing really well right now with their numbers and the business and in the industry they're in. I work in live sports, and I truly believe live sports, all of that is some of the best media and best stuff because you have to watch commercials on news. You have to watch commercials on live sports, right? But you can't watch that on Netflix unless they charge you. So I do think this is going to be a very big opportunity for Fubo, and I'm going to be buying more Fubo. And so yeah, that's where I'm at right now. Please give a like and subscribe if you stayed with this whole thing. Again, I said it was going to be a shorter video, and it's probably one of my longest ones. So thank you so much for watching. I really appreciate all of you. Please give a like and subscribe. And yeah, never forget to